Alrighty, what is up everybody? I hope you're having an amazing day. Today, one of the charts we're going to look at after a 40% bullish movement is BAT, Basic Attention Token. Now, I want to start this with a disclaimer saying never ever ever enter or exit any position based on what you hear from someone on social media, including me. Now, I am going to give you a completely unemotional breakdown of what this price action is doing from a technical standpoint, and we're going to be doing that right now on the 15-minute time chart. Now, right off the bat, if you're new to trading, what does a 15-minute time chart look like? Well, you'll notice on this chart you have individual candlesticks. Now, each one of these candlesticks represents the price action between the bulls and the bears. The bulls, of course, pushing it up. The bears, of course, trying to drag it down. One candle represents 15 minutes of that price action happening. Now, you can also see this as 15 one-minute candles represented in one candle, or 3 5-minute candles represented in a 15-minute candle. Now on the flip side, a 30-minute candle is simply 2 15-minute candles. So there's a quick lesson for you. Don't forget to hit that subscribe and like button as we are doing more of these, and whatever chart you would like me to look at next, leave a comment down below and we'll take a look. Now, looking at this movement, it is a strong bullish movement, and it does look like that we may even be forming this line of support right up in here, right? So that is a nice line of support, and if we actually look at the retracement that happened, we can grab the Fibonacci retracement tool. Now, TradingView is a completely free platform to use. Yes, they do have subscriptions with higher things. No, I don't have a link for you, and no, I don't get any kickback for you using it. But if you want to practice your charting on live markets without paying anything, TradingView.com is a great place to do that. Again, I don't get any kickback for you using it, but there it is. I wanted you to know about it. So we're going to use the Fib retracement, and the retracement requires 2 points, right? Connecting on 2 points, point A and point B, where point A is the start of the impulse or the run up. Okay, so on this, the run up or the impulse looks like it started here. Actually, it looks like it started here. So we're going to take this and we're going to take it up to the top, right? So now we can see this full movement on this one here. On this movement, we retraced right to a 38% retracement and bounced off of it. Now, the Fibonacci does not always look this perfect. Fibonacci retracements are simply a mathematical pattern that happens to occur in multiple places throughout life. It also happens to work quite well on markets. Now, whether this is a self-fulfilling prophecy because everybody doing technical analysis is looking at the same thing, it definitely could be. But it also is just a relevant pattern to life. So now, if we take this as one impulse, what I almost want to do is take this second movement here as its own impulse. And you can see we're retracing to about the 50% mark. We've touched it not only once, twice, 3, 4, 5, 6 times now, and we are bouncing back up. Now, saying this is the spot of retracement that comes upon our trend line, well, what is the next target? What can we look for from here? For that, we're going to go to the side of TradingView. We're going to grab the trend-based Fibonacci extension. Now, like the Fib retracement, this also requires those 2 points of start of impulse, end of impulse, but it also requires point C. So we're going to chart that point A to point B. Now, point C, the new one that the retracement does not require, that the extension does, is the actual point of retracement. So once your retracement has formed, you can take the extension and slap it on the chart just like that. Now, what I'm going to do here is actually unlock this chart, which you can do by unclicking the auto symbol from the bottom right here. If it will let me do that. I have a mail thing blocking it. So what I'm going to do, there we go, that went away. Now I can click this and drag the chart up just like that. And we can look for the level of basically our target. So if we're scalping this, we would have got in right at the break upwards of this line at 597. And now our target, if we're looking the last time this retraced, it retraced 50%. So I would be looking for that +1 on the upside. I would be looking for a 67833 as my first target. And for my second target, I would be looking for a potential push on this. Now this push is before we see another retracement, right? It is a push that's going to look something like this or something like this, just a straight push up, minding these tiny little pullbacks, right? Now this would be a bigger retracement, this would be a bigger retracement. So what I'm looking to see happen is us move up to potentially this line or this line before we see another one of these retracements and a higher movement up, right? Now a couple things confirming this is the stochastic RSI indicator that says yes, you do have open skies that you can move up into. We have the RSI that is playing middle field. This is your strength index. RSI is simply showing the buying power going into the market and the selling power coming into the market as well. If you don't know the RSI, I suggest looking up a video as it's an indicator I use constantly. Now something to be wary of here is, let me remove all the drawings. There is potential for the downside. We do see in the price action this bullish move upwards. However, on our index we do see a bearish divergence. Now this is where our index or our momentum indicators are showing less strength. Our price action is still rising, so that is something to look out for. Nothing, and I mean nothing, there is no indicator that will give you 100% certainty of a move to the upside or the downside. So we do have to watch it as it evolves, and if you want that, I am live every single weeknight, 7:30 to 11, answering questions, teaching charting patterns, and trading live right in front of you guys. So do we have the potential to move higher? Yes, I believe that we could see another 10 to potentially 15 cents in the next run. However, this bearish divergence is something to heavily, and I mean heavily, monitor. Now, how do we know we're in the clear from this bearish divergence? Well, if we do have the index come up and make a point that is higher than the previous, we will then have a confirmation to the upside that is more recent than the bearish divergence right here that leads to downside. So I would say as long as the bulls can remain above this 50 to 52 cents range, right? So we had support here. As long as we do not crumble down to this point, I believe we're going to be just fine. So is there potential for upside? Yes. Is there some caution to be had? Yes, of course, as always, with this bearish divergence being one of the most recent things we've seen on the chart. So hit that subscribe button if you're enjoying all this charting. Leave a comment below on what chart you would like to see next, and hit that thumbs up button, as nobody on YouTube is going to see this video unless you hit that thumbs up button. So I'll catch you on the next one, guys.